Hey traders and investors, it's Serge Berger here. Today let's have a look at the transportation stocks, which have been showing us some really concerning signs over the past couple of weeks or so. Well, let me point this out to you and kind of tell you what it may mean going forward here as far as risk assets are concerned. If you remember, for a good part of 2015, so last year, the transportation stocks continued to give us negative divergence. So they sort of made a series of lower highs while the broader market as represented by the S&P continued to still marginally hold up. Well, all that came to fruition basically in the August sell-off where the broader market really sold off and sort of marginally reconnected with the transports, and then once again coming into the early part of this year. What we're seeing now, however, is some divergence. What we're seeing here in the transportation ETF, the IYT, you can see at the IYT as of when I'm recording this right now, topped out in the 21st of March and is right now about let's call it 5-6% off those highs, right? So we have negative divergence versus the S&P or the SPY ETF, which as you can see is continuing to hold up. We had one down day, but more or less we continue to hold up. Now, more importantly, what I want to show you guys is what this looks like in relative terms. Okay, so what I made here is one of those ratio charts. I took the IYT ETF and it divided by the SPY. And you can see we had some nice relative strength coming off those early February lows, which is one of the reasons why I became bullish on the broader market. But one of the reasons I'm very cautious now is because of exactly the opposite happening once again. So we've had a strong rally in this ratio. So the transportation stock strongly or outperformed the S&P 500, and since the 21st of March, the exact opposite is happening. We're seeing a lot of relative weakness in the transportation stocks, which tends to be a pretty good leading indicator. So again, that doesn't mean that the S&P 500 here, as represented by the SPY, doesn't mean this has to completely fall apart, but it does mean that the upside is likely quite capped unless we see the transportation stocks at least moderately participate. But right now, they're literally heading in the opposite direction of the broader market, and that should keep the broader market somewhat capped here in the upside. So there are some strategies we can do. One can buy some cheap put protection. One can go out and sell some out of the money calls on where the implied volatility is high enough. One can do some calendar spreads. There's a lot of strategy one can do here to take advantage of this. Again, it's not a immediate term call that the stock market's going to fall apart, but it is likely going to keep the market capped on the upside. So I wanted to show you guys that. Again, the important takeaway here is the ratio chart, the relative weakness that we're seeing of the IYT divided by the SPY. Keep in mind these ratio charts. I'll have more for you guys on that on a course I'm going to release a little bit later on this summer. Please, guys, like this video. That's how I move up in the YouTube ranks. Please like the video. Really, really important. If you do me a huge favor if you could do that. And subscribe to the channel. And as always, I will see you in the next video.